if you and I talked 10 years ago, here's what I would have told you. I said gold to me is an investable, and here's why. As a value investor, it's very important for me to be rational. The way I can be rational, when I analyze a company, I get a fairly good idea how much it's worth. Mm-hmm. When you and I can have a debate how much Microsoft worth, etc., and we're going to have a range,
Fair.
Okay. With gold, it's very difficult to have this debate because it has no cash flows. It has a cost of carry. If you actually own physical gold and you put it in the bank,
storage.
There's storage cost, right? So I would have told you that gold is not something that value investing, I would own. Today, we still don't own gold, but I'm gradually warming up to it, and here's why. We live in a world today where $17 trillion of debt has negative interest rate. Like the words negative interest rate, I don't even understand what it means. Yeah. Like it's like something like
it's like an oxymoron.
It is an oxymoron.
Right?
Yeah, yes,
yeah.
Exactly. Because if I give you $100 and you pay me back $90, we would call it a default. Not in
right. No, it's true.
Not a negative
Such a great
interest
point.
Rate.
The market's trying to figure out exactly what it is, in my opinion, and I don't think anybody has the answer.
That's right. And what's interesting about this, that in the past, our policy was, U.S. policy was, we want to have a stronger dollar. Today, we are literally trying to compete with other countries that have either zero interest rates or negative interest rates to drive our interest rates down. Mm-hmm. So we basically operate, we are kind of going towards the command-controlled economy of Soviet Russia, where the most important commodity in the world, which is, price of money,
right,
is set by central bankers.
Right.
So, and therefore, when you do this, you lose signaling. The markets are losing signal mechanism. Mm-hmm. Okay, because there is a reason why market forces set, price for commodities or whatever goods.
Yep.
Because if there's too much demand for it and the price goes up, to produce more. Okay.
Right. The signals. Yeah.
Yeah, that's right. Mm-hmm. And that signaling mechanism has been damaged by central bankers today. So we are in a world where you have negative interest rates. So suddenly gold does not sound as crazy anymore. Okay. So to be fair, we don't own gold yet, and we're still trying to figure out what's the best way to invest in gold.
Yeah.
Do we want to actually, buy an ETF? There are other alternatives.